Most people don't get denied for a mortgage because they can't afford it. They get denied because they didn't prepare the right way. And that's the scary part because you could have been doing everything right and still get turned down. I've helped dozens of clients get approved after thinking they couldn't. So in this video, I'm going to show you 3 things banks actually care about the most, so you can boost your chances and avoid getting denied like I did in so many other clients before they found me. Let's start with the first one. When people think about getting approved, they think, as long as I make enough money, I'm good. That's not how the banks look at it. Banks don't just look at how much money you make, they look at how consistent is it, how predictable is it, and how easy is it to understand. Let me give you an example. Let's say you make a base salary, overtime, extra shifts, nighttime differential. From your perspective, you're thinking, I make good money. I make great money. But from the bank's perspective, they're thinking, is this income stable enough to rely on every month? That's a completely different question. Here's a real scenario. I've had clients making solid money, good money, but because their income looked inconsistent on paper, it slowed everything down. Not denied, but just made the file harder. We had more questions, more conditions, and more stress. What actually boosts your chances? If you want to increase your chances, make your income easy to understand. What does that mean? That means consistent deposits, clean structuring or clean pay structuring, showing stability over time. Stable over time, meaning it's consistent, because the easier your income is to trust, this is the one that surprises almost everyone that I tell it. Your monthly payments matter more than your income. Never heard that, right? Your car payments, your credit cards, your loans, individually, they don't feel like a big deal. But when you combine them all, and two, most important, to the bank, they stack together. Here's a simple way to think about it. Imagine your income as a bucket. Every monthly payment is a hole in that bucket. The more holes you have, the less room you have for a mortgage. Here's a real scenario. I've seen situations where someone says, I can't get approved. We look at all their numbers, and the issue isn't their income. It's a payment, a car payment, or a couple credit cards, or one small loan. We just adjust. We just adjust that one thing, and suddenly now the deal works. The file works. Same person, same income. It's just a different structure that saves the deal. Here's something else that's going to boost your chances. Reduce the pressure on your monthly payments. That could mean paying something off, lowering a balance, avoid taking new debt. Avoid it. You don't need that extra vacation. You don't need a new car payment. You don't need to be perfect. You just need to create enough space. Third one, this is something that no one talks about. How you position yourself before you apply. This is where people either win or they lose before they even realize it. Most buyers treat this process like a test. I'll apply and I'll see what happens. And that's the worst way to do it. You don't want to guess what's going to happen. You want to know the outcome, or at least the outcome, and make the outcome favorable for your chances. Here's what winning buyers do differently. Winning buyers, they don't guess, and they know what needs to be adjusted and apply when they're positioned correctly. Here's a real scenario. I've had people come to me saying, I'm not ready yet. We go through everything, all the paperwork, we look at the numbers, they start realizing maybe I am ready. And I've had people think they were ready, but they were completely off, not slightly off, completely off. The difference in the two are the preparation. So what can you do to boost your chances? Do not walk into the mortgage process blindly. Instead, understand your numbers. Fix whatever you think is holding you back, or speak with someone who can help you figure out what's holding you back. That alone can dramatically increase your approval odds. All right, now let's tie everything together. It's not because they're broke that they're getting denied. It's not because they're irresponsible. It's because they didn't focus on the right things. They focus on perfection, random advice, or just waiting too long trying to time the market instead of focusing on income clarity, payment structure, positioning. If this video helped you understand what actually matters, the next thing you need to know is the mortgage rule that decides what you can afford. Because once you understand that, you'll know exactly where you stand. Getting approved isn't luck, it's positioning. And once you understand that, your chances don't just improve, they become predictable. Over and out.